Hello everyone, welcome to another weekly market review. It is the 5th of July 2021. Crypto is giving us some interesting signs this week, and commodities are also likely bottoming out. The dollar is getting rejected from a key resistance. Let's have a look at what we have to play. Let's start with the total market cap chart. This is the quarterly. After four really strong quarters, we got our first red quarter, a negative quarter. But unlike Bitcoin, this is not very extremely bearish. You saw me show the Bitcoin quarter, and essentially that's not bearish either, guys. You cannot analyze candles on their own. We always need information from the next candle after. So you can see here, we had a bearish engulfing on the monthly time frame. We got a follow through, so this engulfing is very valid. But just on a higher time frame, if we look at this even on a monthly time frame, you can see on this time frame we don't have any levels. So this is part of the reason why I think the market needs to, even if it has to build some levels higher, it needs time to do that. It can't happen overnight. It's funny because since the first dump that we got, all we see is V bottom opium charts, and nobody looks at the relevance of the higher time frame when it is the most important. Why do we start with a weekly chart? Because it is the most relevant. Outside of that, everything else is less relevant because it is always clearer. A higher time frame will always give you a clearer picture. So the weekly, what we saw in the total market cap last week was a subtle hint that I spoke about, that we closed last week slightly lower. What we've done is we got rejected from last week's open, because on the weekly we don't have a higher time frame than the weekly itself. Let's just look at something. Let's look at the 3-day. I think I'll come here for the 3-day. So 3-day is the key level right now, guys. Here, this 3-day block, I shifted it because when it's support, you use the wicks. So it was finding support at the wicks. As resistance as well, I can use the wicks, but just to keep it tight for more information, this is still very much clearly the level, guys. Just look at how clean it is, and the market is still just proving it. And what is happening right now is, we always need these key levels. Yesterday as well, we were right at this level. I was looking for shorts for that exact reason, because we are right at resistance, and levels are levels. This is strong support till it proves itself to not be. Once it flips, it is strong resistance as well till it proves itself to not be. So while price is here, this is so clean and so clear, guys. It's not rocket science. Yes, there are other points of confluence over here that can be taken into consideration. We have the monthly pivot as well. So price was flipping the monthly pivot for a while, and this is what had me slightly cautious, but we were still at resistance. And essentially what happened on a lower time frame, I'll just show you. So we got here, this is somewhere around last afternoon, and this is where I was looking for lower time frame setups for shorts. But essentially what was possible was that we would end up getting a stop run. Whenever we are ranging the top of a range, you can anticipate that. I chose certain coins that had moved hard the day before. For what reason? That it is possible a lot of times when some coins have moved harder a day before, they start to get their sell off early, and after that what happens is that even if there is a stop run, it does not end up catching the highs. Unfortunately, I did not catch this. Once we started moving back up, I closed whatever shorts I had at break even. And then it was basically, when you're at the top of the range, it's a lot of watching, guys, or you set alerts, and for me this is the middle of the night, so sometimes I prefer to not wake up when we are in uh, very strong volatility, alt seasons and this and that. Sometimes I do choose to even disrupt my sleep with certain kinds of alerts, but this was not as significant for me. In terms of high time frame swing trades, I still have swing trades from higher. It was just about adding to those positions at the right place. But nonetheless, it's this is what it is. This is just the kind of setup that we're looking for, a rejection at resistance. So what new information we have? Perhaps this time I'm going to chart total to show some new information. But as of now, resistance is resistance, guys, for the total market cap as well. It is holding on. This is a significant reaction from it. Are we going to go down straight away? We cannot say. It could be that this can range here longer, because it's not giving us enough information to project that. But if you look at the 3-day, the 3-day is going to close today, so perhaps that will give us more information. More than likely, it will close below this 3-day level, but the probability of closing below this is significantly high now, which is now 3-day candles getting rejected from what was previously support. So this just makes this level very solid, and I would not be overly excited unless price starts to flip this into support. As a bull, I just would not. And in terms of other possibilities, so just look at it quickly on the 1 hour. We could still very well range, like these scribbles that I drew out last week. It could still very well be this. Why do I say so? Because the first reaction that we've gotten from this key resistance, this is the initial reaction on the breakdown. So we can count this, but it was on a very low time frame. On a higher time frame, when we got the reaction, this was no longer the 0.3, it's the 0.5 retrace. So the first reaction that we have gotten from here, it is not such a weak reaction, guys, because see what happened. Once we came back, price came all the way back up. So what we learned from it is that this entire zone, this was the first drop, so there's a lot of liquidations once we broke this level. So this was a liquidation cascade right here, and that is fine. We came down here, we traded this all the way up to this level, and our objective and what I was talking about was that if this is really bearish, we would probably get a reaction from one of the fib levels, and preferably a lower fib level. So what we do for that is we pull out the fib, and what was I showing was that between the GP and the 786, if this is really bearish, we should get a reaction from there. But price didn't do that. We got impulsive all the way into resistance. So this shows that there is still demand in this entire zone. If we were really going to be starting to move down, we would have likely started to get this reaction from this GP and possibly started to move down, even the 786. Instead, we came up for an entire short squeeze, took out shorts here. So that is the reason it is still possible, since demand is reflecting over here. That is the reason it is still possible. Let's see how deep this comes, but it is still possible we get this range before resolving. And what I would say is this is the range for the market right now, guys. Right here, this the lows that we built right here, and this 3-day block that I have spoken about. It's a very tight range, and I think this would give us a good move out of it. How deep, we can start to look at that as well. I will unfold it in the altcoin charts, because there's something interesting going on there also. So as of now, what we have is higher time frames. They still show us, we're just hanging in midair. When price is hanging in midair, it needs time for this to not be midair, guys. If this really has to build a base, it has to be on a higher time frame. Otherwise, the move that will come out of it, we cannot expect. We cannot expect a really big move unless there is some very big fundamental aspect of the market that can drive it to do that. And for now, the way it is shaped, it just needs to not look like it's in midair, and for that it has to build something before it can start to move up from here, if that is what the plan for the market is. Let's look at the altcoin market cap. Here's the quarterly chart for the altcoin market cap. You can see how much stronger it was at the later stages of the bull run, wherein even a big sell-off was not able to print this as a red candle. And just like the total market cap, it is still a candle of indecision, guys. It does not give us enough information to turn entirely bearish. If you look at the monthly as well, there was no engulfing on the altcoin market cap. Yes, the month after gave us a sense of directionality, but look at we'll have to see how July goes. But in all likelihood, this is not overly bearish if you look at the reactions that we have. But see, when we're looking at higher time frames, we did have 2 months of potential demand when we made the last bubble, and it was literally the third month that really gave a sense of that direction. We got that complacency so much lower for the altcoin market cap. Look at that. So it's a 382 retrace. Look at how much lower it is from the highs. 50% lower. We got that complacency. So we saw that on a much lower time frame on the total market cap. This is the kind of complacency shoulder we were looking at for the total market cap. We got that at 50% lower. But this is a very high time frame move. Basically that was from 2015 to 2018, early 2018, and then a year and a half of a downtrend with another year of consolidation. So it's a very high time frame move that we have to see. This July will give us some more information. We cannot make conclusive decisions. We have a correction, but it is not conclusive enough to come to this conclusion that yes, this is going to be a very high time frame move, and that this move is entirely over. On the weekly, we are in a very clear downtrend. Here you look at it, even on the altcoin market cap. So this is the low that made the high. Okay, so we made a lower low, we made a lower high, and we made another lower low. So on the weekly time frame, just from plain market structure, even the altcoin market cap is now on a downtrend. We did this on Bitcoin by the 12th of May. By the 13th of May, we had made this a confirmed downtrend, and that is exactly where you saw me turn fully bearish. But it is what it is. That ended up giving a very great opportunity. It was right up here when that happened on Bitcoin. So for the altcoin market cap, yes, we are in a confirmed downtrend on the weekly time frame. What does that mean? To reverse it, we need to build a higher high, print a higher low, and then make a higher high. Once price does that, you can say yes, we can look for upside from here on. Alright, so this is what it is. This is what we need for the altcoin market cap as well. As of now, it's a clear downtrend in terms of levels. Look at this, very clean and very significant level. It's the weekly consolidation that builds a high. And what did price do? Price came up, tested it as support, and got a strong reaction from here. So very significant consolidation, guys. It was previously what built this move, and now this is where everybody, the buyers who were trapped here, as soon as price came back up, they were willing to sell, because they saw this big candle. They were willing to sell over here. And also many traders understood this as a very good place to manage risk, to potentially short for downside. So on the weekly time frame, again, on the altcoin market cap, we have uh, this information that even on a closing basis, we have made new lows last week. um, the previous week, it has not been strong enough to build some kind of an engulfing. So this shows that it has a corrective nature on a higher time frame. Let's look at it on the 3-day. So the cleanest picture, guys, it is on the total market cap, such a clean picture. But even on the altcoin market cap, here you can see this is the a very key level on the 3-day time frame. You saw we gave a hint over here, we closed below it, gave a very good place to get that bounce, manage your risk. We were shorting here, guys, so you can see multiple levels of confluence. Okay, and now look at it in terms of support right here. Look at how long this level was resistance. This is 3-day candles. So sorry sorry, that's 3-day candles. So very significant resistance for a long time, and eventually we broke that. We've come back down. It's holding up as support for now. If we look at it very cleanly, this can be a bit of a debate, whether to use this and to use this. If we use this is still holding as support for now. So which is significant. If we had closed slightly lower, what I would have said it that this is also giving hints which are going to be significant. But as of now, what happens with levels, guys? The significant level is actually this weekly level, which has held. But when we refine it, we zoomed in and found another high time frame level, which is which is on the 3-day, which is still significant. So for now, on any lower time frame, I would give this precedence. So if the 3-day would have closed below this, it would have given us a lot of information regarding that, but we did not. And for now, what have we done? We're coming back up to trade into this level. Did we test it yet? We didn't. Could we test it? If we do, it gives a great place to manage risk for potential downside. So this is what it is. And just hint for the market caps, guys, look at what I did. I'll just show this to you. This is an error in trading view calculations. So what I'd say is, when you want to pull out your fibs, just go down to the 12-hour. Okay, because look at this. Okay, I'm pulling out a fib which I want for this significant information. Both these levels are supposed to be valid, but just because they have an error in their calculation, look at what happens when I move to the 12-hour. I have to readjust these fibs. So this is not good. They're giving out different information for the wicks on the daily time frame and for the wicks on the 12-hour time frame. So this is something essentially that they need to be notified about, because it's not accurate. So when you want to pull out your fibs, just go to a lower time frame. So yesterday, again, why was I looking for shorts? Because we were still at resistance. How significant was the resistance level? Let me just pull out a VWAP as well. Look at this channel, guys. This is a very good channel. Channels can be very powerful when you're trading them. Look at this, breakout, of failure. All of this is very significant. Okay, you're trading it on both ends. This is a great place to manage risk for potential upside. But once you reach here, you get this breakdown and a failure retest. Again, it becomes a very good place. It adds confluence. Diagonal levels are just there to add confluence. So what do we have? It's a very key anchored VWAP that I was looking at. I don't know, maybe it's from the Feb lows. It's right from this Jan breakout. Yeah. So right from the end January breakout, this was a very strong move, guys. Once we got this, it's a very strong move. So just from this Jan breakout, quite a relevant anchored VWAP. Look at this, support, breakdown, resistance, came back down. We tested it as resistance again. Okay. Also another significant resistance. Let me just look at it on the daily. Yeah. We have this daily level right here. We need to shift this because this is actually what is much more relevant as a daily. Look at this, support, breakdown, resistance, and a strong reaction from it. We've come back, and I was telling you, if you look at the Discord again, I said total market cap, total 2 is at resistance. Okay, total was at resistance. So this is the resistance, guys, on total 2. I showed you the resistance on the total market cap was the 3-day. And look at how significant these levels are. You know, all you need is, you know, that objectivity to understand where these levels are. And you will know that, you know, there's a lot of other players who are looking for the same thing. So they will be playing the same thing. And you will find that levels which have a lot of confluence as levels, more often than not you will get a reaction from it. So they always become a good place to manage risk. My entire trading system is based upon finding these levels, you know. And what we learn in V2 is exactly this, you know, how to find these levels, how to create confluence. But essentially, if you've been watching my reviews and paying attention over a long period of time, you can know, you know, quite a few aspects of how and where I find these levels. Is this all I'm looking for and is this all I'm finding? No. You know, I'm crazy about confluences. You know, sometimes there's levels I'm finding confluences, you know, of 6, 7, 8 different aspects. That gives me so much confidence to trade that level, you know. But right here for you, you know, I'm giving you a confluence of 3 things: a daily level, a GP fib, and a key anchored VWAP. That's very significant confluence. What are we getting? We're getting a reaction from here. Is the reaction strong enough? We do not know right now. We need more information for that. But what I would say is, look, this move down for the altcoin market cap, this qualifies as a 5-wave impulse out of here, guys. If we were very bearish, the first initial rejection we got from here, we should have built a more shallow retrace and already started to come back down, or at least gotten a rejection from there. But for now, we've made another move up into what is logical resistance, and now we're waiting for more information from there. So in terms of levels, you know, from here we've gotten a giant reaction. You know, this reaction that we got early June, this is so significant. It's a very powerful move for the altcoin market cap. You know, it's a 40% move. And if we, so what we did, we got a golden pocket retrace from that, and if we count the entire move up, this is also the 0.5. So here's another hint, another point of confluence, you know. So we've retraced this move, you know. If we count this as an entire wave set, we've retraced that. But this, you know, this is not entirely bearish, guys. A retrace like this is not entirely bearish. It needs more information, and price can very well come back down. But you know, what we have down here are also significant levels. So do not be surprised if we don't, you know, if we don't move down to, you know, extremely low levels and we start to build some kind of a base right here. Why do I say that? Because there is potential. We're always looking for leaders, you know. We're looking for leaders in every direction Who let this move down? Bitcoin let this move down. Bitcoin was already bearish, all the while altcoins were making highs. What was another hint for the market that it could have topped out? The incredible, absolute, terrible trash was pumping against Bitcoin. You know, your Bitcoin Cash, your Ethereum Classic, essentially coins that could become absolutely irrelevant. They were pulling out value from Bitcoin. What did that mean? Why is that? It is because the smart money, the people who've been accumulating those coins, needed to trap retail, and extract Bitcoin from them. And the easiest way to do that is while the market is euphoric, to get everybody in and then trap them and essentially keep them subdued for such a long time. Just time correct those people. Human beings are greedy. If somebody got greedy up here, they can hodl it, for a 60-70% correction. But what will start happening is that, if there's a narrative for certain kinds of coins down here while price doesn't do anything, they'll likely jump the train. They're not going to sit on those coins that they bought here. They want something else that might give them, that fast release of dopamine. Everybody's looking for satisfaction. Some people are addicted to satisfaction from gains. Those are the victims of markets. Those people always looking for that instant pleasure. So they're gonna jump the train here, guys. So maybe there could be some fundamentally strong coins as well that people might have gotten trapped into up here, and they might end up moving later if we do start basing it bottoming out here. But they took that loss. They held on, and they're gonna take that 60-70% loss. And then there'll be others who possibly held your Ethereum Classics and Bitcoin Cashes up here. They're gonna sit on those dinosaur coins for possibly another cycle, and likely price may never get up to those levels. That can happen to so many coins. So those are the kind of people that are up here and trapped. I think everybody who bought in April is still underwater. So I would say a lot of them may have capitulated already, but those that hold, it's going to be very selective, the market. And why I was interested is because there is already a part of the market, the altcoin market, that is starting to show some signs of revival, and that is the NFT space. You can do your own research on that, because it is not so liquid. If I start mentioning a lot of those coins, I prefer to not do that with a Discord, with 600-700 people. Our Discord is pretty big now, so that is why you'll likely not see me, calling coins that just have 3, 4, 5 million a day in liquidity. I would likely want at least 10 to 15 million plus of liquidity to look for coins that other people can look at also, because otherwise it's quite simple, guys. This is how markets work. They're very unforgiving. If all of us are to enter a coin which has say 2 or 3 million or 5 million liquidity, we could easily make a spike of 500k, 1 million altogether. And what that does is it shows the market maker our position, and it's very easy for price to move the other way when it gets that much liquidity, and when it does have that bigger position to chase down. This is the reason I don't appreciate pump and dump groups. I don't appreciate bigger accounts, shilling smaller coins. And this is just the exact reason, because it puts everybody in danger. So if I'm playing some smaller stuff, this is just the reason, which is why I'm okay for our ecosystem to become more scarce, and likely we too will do that. It will bring for us a tighter group, and we can start to share information which is more scarce, because a lot of coins that have lower liquidity, they are more scarce. A lot of times there are people who are not in it. Most of CD may not be on it. So that's the kind of information we may start uh, getting the leverage to share once the ecosystem is more scarce. Yeah, and that is around the corner. Don't make no mistake. I mean, I've gotten DMs asking if V2 is a meme. It may have been for a long time, but maybe it comes into fruition sooner than you think. But anyway, so for all current market cap, again, significant level of resistance. Is it strong enough, the reaction for now? Maybe not. But it, it is it is something uh, significant that we do have a reaction already. It could possibly test this again, showing what I did about the total market cap. Then you could find another place to manage risk for downside. What do you want to see for upside? It's clear as day. This is support, support, support. It's a resistance now. So you want to see this flip into support, and you can trade it back level to level. Is that a confirmation of reversal? No, it could give you a fake as support, and then instead of moving back up, it could break down. But how you play those guys? Even playing a setup like that, you need to see what kind of structure supports a move. If we build a consolidation here, and then create a support level, that is more likely to hold than a move like this. So there's no consolidation in this move. A move like this, which comes all the way up here, it is exhausted by now. Okay, this is exhausted because there is no big levels where it has consolidated. All the way from the 600 billion, we've come all the way to 810 billion. So if price is to consolidate right here and then make a move up, maybe there is potential. But if we come back up here, kind of make a low volume run up to here and then start failing, it will give you a very good setup to trade this back down. Because what we are looking for now is potential structure. It needs to be strong, a structure. To make a strong move, the structure needs to be strong. There needs to be a decent amount of selling into what can become support. That's when a structure gains strength. Is this enough selling for now? Likely not. Is this relevant? This level is likely relevant. Why? Because we're getting a good reaction from it. The first reaction was really good. We got a 50% move. This is a more diminished reaction, but it is still a 30% move. So let's see what happens if we can get that rejection and start to get another test of this level. Would I try to find a place to manage risk for potential upside? I likely would. But what is the best setup right now? We are at resistance. So just put 2 and 2 together. The best setup right now is still to find a place to manage risk for downside. What are the certain hints that this could be a level of interest? That we are starting to find coins that are breaking their higher time frame market structure. They're starting to build reversals on daily time frames. If you can see coins that do that, a lot of times they may end up being lone runners, but even in bear markets you'll find those. So look for those guys, do your homework, put in the work, and you will find ways to maximize your gains. For the broad market, the way to maximize the gains is still to find this level as a place to manage risk for potential downside. For Bitcoin as well, I think this is the picture I've posted is as clear and simple as it can be. Just simple liquidity theory. All the liquidity up here has been taken, all of this liquidity has been taken, and then we made a move which took out all of these tops as well. So what that brings us to is a logical range, so we get strong levels from where to manage risk and where to expect and anticipate potential reactions. So as of now, what have we done? We have given a potential reaction right from the level where it was anticipated. So so many people, they're looking at this and like, oh man, so much sideways, complete noise. We traded this entire range, like we have been. This was a great place to manage risk. Again, I was looking for higher beta, guys, so I haven't been overly interested in Bitcoin just in terms of the risk and reward, but we did trade this entire range. You can just go look at the previous videos, look at how I plotted out the range, why we were looking at certain levels. But that was range play. But here's something else, something entirely different, liquidity theory, also allowing us to logically understand what is happening in the market. Everybody's like, whoa, so much noise, terrible. There were so many harmonics in here to play that it was just play after play. Every swing level was giving us a harmonic to play, along with confluence to find places to manage risk. Again, what was giving that higher accuracy? It was confluence. There's no other way you will get that, guys. There's no other way you will start to find levels that give you good reactions until you know what all there is that you can look for in those levels. I've been dropping a lot of nuggets in this review, so I hope it benefits some of you. But anyway, we're getting a reaction from what is potentially resistance, and the play should be the same, guys. If price can come up here, take some more liquidity, find a place to manage risk for that. If we flip here, then maybe there's a different story coming up, and then we can look to start trading this up level to level. But for now, just more confluence with the resistance on total market cap, the resistance on altcoin market cap, and here's resistance on Bitcoin market cap. So another point of confluence, 3 different assets. They are different assets. Total market cap is a beast of its own. It gives us different information. Altcoin market cap gives us a different information when a lot of coins are doing their own thing. Ethereum was doing its own thing, so altcoin market cap chart is looking different, and Bitcoin chart is looking totally different. Bitcoin never made that higher high, so, and this is likely a 786. I pulled it out yesterday, so it is a 786 retrace as well. So Bitcoin is much weaker, than what alts are doing. And just more likely because of Ethereum, but some of the other NFT and DeFi names as well that have been pulling the market. So this is essentially what I was expecting for the entire market, what I was anticipating for the entire market. But what we've gotten is still reactions from logical levels. So in case price can structure out here and give you another go at this, I would suggest you take it, because it'll be a good place to manage risk. Otherwise, we could just already end up bleeding back down, start to break low time frame structure again, and start to look for potential downside. How far down, that is another question everybody has on their mind. We have to see, we will have to take it level to level. I mean, on the total market cap as well, I have shown you levels of confluence. But just if we just look at liquidity, guys, even if this has to be a very shallow move down, just look at how many stops are here. If somebody just went off to sleep in January, bought this bottom and never came back, managed their risk from these lows, or even this low, they still haven't been stopped out. And neither is someone who's managing their risk from this low, neither is someone who's managing their risk from this low. that gives me a hint that price needs to take this, even if it is you know even if the market is really bullish, and this is not over. I don't know why the market would not take this. Just plain liquidity theory, guys. There's just so much liquidity right below here. So I'm very interested in that, and the reaction we get from there. Trust me, I have a lot of alerts here, and these are the kind that would wake me up, at any point in the day or night. So significant. This is why this level is so significant, and I find this a reasonably good probability, for price to visit this, because I just don't see how the market makes it so easy for your stereotypical, oh, this is a Wyckoff spring, and the whole market is going to be in and we're going to make new highs. I just don't see how that happens. This market is sophisticated enough for that to not happen anymore. That's very 2014 2015, that, because that's when the entire market, I mean, crypto Twitter was scarce then. There was nobody there. Is it scarce now? No. Is Wyckoff Twitter scarce now? No. Everybody is on it. So would it make sense to take out their stops on this spring? It would make a lot of sense. Will it happen for sure? Nothing happens for sure. This is the market, and we will play probabilities. Is it a reasonable probability as a scenario? It likely is. For me it is. So let's see how that works out. Still same thing, guys. Just like the total market cap and the all-coin market cap, key level, if price can come back here while all of that hopium is going on, find places to manage risk for potential downside. If we continue, then you will have to and if you miss this, then you will have to look for some other places to manage risk. Can we go down so quickly? For sure, I'm not so sure if we can just bleed back down, so we have to see. For traditional markets, we're looking at the quarterly chart for the Dow Gold, and essentially what we have is a very clean setup on the Dow Gold, guys. Look at this. So this was the high, that was responsible for all of this downside, and this is essentially the high that made the low on the quarterly time frame. We got that reversal early 2013, but we made basically a full high time frame reversal. And what do? We've corrected that to a 618 in confluence again with a key quarterly level, this quarterly level, and then we've made a higher high. So this on a quarterly time frame, this is essentially the high on a quarterly that made low, right? So we've made that higher high, and now we're making what can be a potential correction. So just look at it on the monthly as well first for a second. So yeah, on the monthly time frame, we've made this very powerful V bottom. I think if the market is really bullish, it just needs to structure out just a little bit over here before moving. And you can see last month, June, has become a monthly engulfing. So the only thing is that there is no wicks here. This is not exactly bullish, guys. When this happens, when there's absolutely no wick, it's not exactly bullish, but nonetheless it is a monthly engulfing. We were looking at this level right here because we fibbed out this move. So what do we get? We got solid reaction from that level. Just a second. Yeah, I was just looking for where these fibs are. So yeah, we got a solid reaction from that level. Essentially this is the first wave, And if this is the next wave, it's still a very shallow retrace, guys. Essentially, if this is as bullish as it needs to be, I just cannot say. We were very much expecting a potential reaction from here, and only on a breakdown from this quarterly level were we looking at the next level of support. But if price really has to structure out, it really has to hold here, I would just prefer, if we can at least get another retest of this level and move up. That would give us this very powerful V bottom structure. But make no mistake, this is not the time to be overly exposed to gold in relative to the Dow. So risk on assets are still something that will likely outperform, especially when you can find the leaders. So for Dow Gold, most preferable scenario would be to build structure, so which would mean that there could be a move on for precious metals against the Dow. Build the structure and then get that bigger move up. So for now, that is that. Would I want to trade this up here? I just don't like this structure, guys. It's weak for me. I wouldn't prefer to trade this higher, which is why I'm just not so enthusiastic about taking the market. Yes, they are leaders. Right now, energy has just been performing so well. They are leaders, which you can very different structurally. But just as a macro broad market trade, I would most likely prefer for this to come back and structure out. For commodities, I just want to take a look at silver. It's been very significant. And just look at it, guys. Historical levels. This is a yearly level, so essentially we just kind of closed above it. It's just for that reason that I had kept it, as a yearly level. But you can see we have high time frame resistance here. This is the quarterly chart. Just 3 quarters straight we have failed to close above in this zone. And if you just want to map it out as a quarterly, because on the quarterly, on these charts which have multi-year history, I prefer yearly levels. But just as a quarterly level as well, just look at this, so clean in terms of resistance. You can even see, look at this 26.5. So significant on a higher time frame that we have found resistance, right here. After finding big support over here, where is the next level of support? This might be in the process of building it. What is this? This is the previous range's POC, the range over here. So it's so interesting. So the range over here, it ended up being, the POC of that range ended up being a quarterly level. So it's very significant, this 24.3 level on silver. But as of now, this is high time frame supply right here. So very significant. Do we want to long resistance on a higher time frame? Possibly not, but on lower time frames there are still structures which are very informative and not so complicated to play. And this is what I was showing you. So on the 4-hour, we took out all of this liquidity, a great golden pocket retrace, and a break in market structure. Higher high, higher low, and higher high. So just low time frame stuff. Where is our resistance? Our big resistance is up here, guys. Above this quarterly 27, everything is getting sold. So this is big resistance. What's the play here then? So we had another resistance. I think this has been washed out a lot. And since it didn't hold for now, we can just let this level go. So what's the play here? So the play is, we found support previously at the weekly pivot, and you can see resistance. We got a hint that we can break it. This was the break, found support, and got continuation. So if price can come down here and test it as support, this yearly level, weekly pivot, and monthly open, this is a significant area of support. If you can get a retest of this would be a great place to manage risk, to continue to play this higher, at least till the monthly pivot, and then we have to see. This is not entirely bullish yet until we start to find support above the monthly pivot, so very significant level up here, already finding some kind of resistance there. But this is the play for silver and for now.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!